Well, it's time to wrap it up for this February the 12th, 2015. What another good day we've had trading. We had this nailed and pretty good on our calls and everything. We started off this morning wanting to buy 70.72, and right there you have it. We had a sell. Started out at 79 to 81, and then 84 to 86. After this morning's news, we lowered it to 75, 77. Produced maybe a break-even trade right there. Market is still trading up. The all-time high of this contract is at the 2088 level, and you have to say, you know, what's going on? The fundamentals are so bad of late. Everywhere. I mean, there was an article, I put an article up today that China's growth for the fourth quarter estimated at 2%, 1.72%. But we are higher, and the reason for that is right down here. Buying. When the news is bad, these guys step up to the plate. They're not going to let the market go down no matter what. So my guess is before a 3-day weekend, a holiday on Monday, we're going to see a new contract high. Now we may not close at that level, but we're going to see a new contract high. Why? It's the only bright spot in the economy, and that's where we are. So right now, the market were to close right in here, we'd be selling failure to take out this 85, 88 area. But like the buy side of the market, after the news was hit the market. Why? Because bad news, ironically, is good news. It means the Fed can't raise interest rates and they cannot stop supporting the market. So we had a great day trading the E-mini. Pretty slow, pretty choppy. We're seeing that. And the reason we see that is that we don't have a two-way market. It's a one-way market only. And that makes for tough trading. Higher low, higher high. Now, everybody at one. How do you trade this thing? You know, where's the idea come from? F1. The idea. Higher low, higher high, we're buyers. Move out of the middle. If I put all these together, I've got a P right here. I got to move right out of the middle. I mean, why wouldn't I be a buyer to retest this high and or take it out? Looking at the F2 screen after numerous updates today, you're going to, it obviously confirms the F1 screen. We're dealing with P's. We're dealing with volume moving higher in each of these distributions. We're getting moves out of the middle. So the easiest trade to see will be failure to take out 85, 88. On the buy side, 80, 82. And then our 75, 77. News, import-export prices. Don't want to pay any attention to it. The Michigan sentiment at 98.3, and that number could come in higher than that because of the stock market. It's kind of a good measurement of stock market sentiment. So, market is pointed higher. No reason not to think it's not going to go higher. Sure as hell ain't based on fundamentals, but we know what it is based on, and we can trade accordingly. Okay, the 30-year auction was an average auction, no magic there. So we've got retested the previous day's high. It's held. Kind of an outside day, maybe an outside day, close to an outside day. It really gets down to what is the E-mini going to do. But tomorrow is most likely a pause day. So this one has trading range written on it. And tomorrow is a pause day after the auction. And that usually means the market does nothing. Why? Because anybody and everybody that wanted to buy, wanted to do something, has done it. And it's settlement day. So here we are, definitely dealing with a B, a little bit longer term, but we're right up here at resistance. So We like the market. We moved our buy up. The market did pretty much as expected. This market is trading higher because of economic weakness. A couple hours ago, we said the market would close in the 28.12 area, plus or minus. I believe the day session close was 13.5. Now, that wasn't perfect, but pretty damn close, and it was done 2 hours before the fact. And it was done off the average price of the 3 auctions. So you know what's coming. You know how to trade accordingly. We get down in our buy area, which was 5 to 9, and we can be buyers with the idea that we're going to close it at 12 or so. So where is resistance? 16 to 20. So our sells 15 to 19, 23 to 27. If the E-mini melts down and sells, which I don't think it will, we can trade higher. But my guess is tomorrow we're going to trade 16 plus, 8 minus, close it at 128.12, 128.13. On the buy side, we'll leave it 5 to 9 because I think the E-mini is going to get stronger this afternoon. If the E-mini weakens, we're going to be buying 13, so we'll put a 13 right there, and then a 1 to 29 for buy 2. I don't see any way to get down to our second below. Famous last words, right? Boy, I sure hope I can shake this damn cold this weekend. I hope I never really get sick. I'll be whining and complaining, and it won't be fun to be around. My hats are off to the medical community. I just couldn't stand being around sick people all day long, which is why I'm not in that field, right? But they have a lot more patience and compassion than I do. Well, you don't hear me when I turn the mic off. Christopher, when we get done right here, re-ask me the questions that I didn't get answered today. I don't know if I got them all answered or not. But anyway, here's the 30-year. Right here is the tractor, 28, so I think we're going to trade 46.28, give or take, tomorrow. Got a seller at 147.04, 8 for sure. So 31 to 03 will be sell 1, 7 to 11 will be sell 2. On buy side, 13 to 17, and 5 to 9. We'll look for a sideways today. Hey, they got snow in the forecast for us next week. I like the sound of that. Not that I'm particularly in love with snow, but we sure need the moisture. And, of course, Henry thinks that he's died and gone to heaven when it snows. You know, as snow-adapted as Newfoundlands are, I'm always amazed at how many times Henry has to stop and chew snow out from his paws. And I've left him fully covered with fur, and I've shaved it down, and it doesn't make any difference. So maybe they're fully designed for crusty, wet snow as opposed to the dry stuff. So that's it for our 30-year. Looking at gold. Again, the short side of the market comes from central banks selling risk-off, risk-on investments. Stock market's higher. We're dealing with a beast, so I still think we're looking for a place to get short. So sell one's 25 to 27. I hate to sound like a broken record. Then 30 to 32. On the buy side, we had 18 to 20 this morning. That's where support is. No magic there. Then we'll make it 15 plus or minus for buy 2. Henry runs with a golden doodle, and they knock the daylights out of each other, but she turns faster than he does. He outweighs her by 20 pounds, and he's got the same straight line speed that she does, maybe even a little faster, but she turns inside of him. So what he does when he's getting ready to turn is that he rolls. He'll just he'll angle a little bit, then he'll roll when he's going the other way. And she's kind of figuring it out at night. So what she did last night when he would drop and roll like that, she'd put brakes on and she'd jump up in the air. And she found herself really close to him when he's coming off the ground. So Henry's going to have to change his tactics. But they're amazing to watch play and get after each other. It's really a treat. And I always like it when we take Layla out because Henry gets in 10, 15, sometimes 20 minutes of the hour or so walk. He really gets a workout when they go at it. So, but they are fun to watch. I waste a lot of time watching them. Okay, crude oil, right up here. My eye is pulled to that, and then volume up here. So probably 52 and a quarter is our best resistance. Oh man, yeah, he high energy, and he knows how to build energy quickly to turn again. He's a character. I'm gonna this fall probably put him into agility trading. He is that quick. So this is where resistance is. S1's 51.50, 51.75, and 52 and a quarter would be sell 2. On the buy side, last rotate down was 50.75, then 50.35. So we'll make 50.50, 50.75. It's right in the middle. This is not a good place to be a buyer. This is a directional call. This is a structural buy down here, 50 to 50 and a quarter. So the buy 2 is a much better trade, but for some reason this thing is just going to try to trade higher, so it might take this 50, 50, 50, 75 to get in. But when you're making a call right in the middle of any distribution like this, and you want to be long or short there, you're making a directional call. And on those you can expect to be right about 50-50. So outside in is pretty easy to see. That's what the structure dictates. You'll have that trade 70% of the time. When you get into the middle and you're making a play long or short, it's 50-50. You're predicting the future. Okay, I had an interesting talk with a fellow today, and very well grounded, a very good student, and he had never looked at the market through volume. He always knew that there was more to it than just price activity, and if you study what is driving the market, if you find that piece of information, what is driving the market, it's informed money, it's big money, more volume on the buy side goes higher, more volume on the sell side goes lower, then you got a chance at doing this. Then it gets back down really to your psychology, your mental makeup. Are you a calculated risk taker? And if you are, you can do this. But that's the neat thing about the profile. Every market looks the same through the profile. Now you have to understand you have to know what the rotations are between the pivot highs and pivot lows, but that's all you need. Every market looks the same through the profile. Every profile, no matter what the time frame is, 3 minutes, 5 minutes, 10 minutes, 30 minutes, an hour, daily, weekly, they all look the same. The rules are the same. So it's consistent. The profile is consistent across every time frame in every market. That's why it's worth studying. And then once you get past that, you have to develop a methodology based on the profile and based on which way the volume moves through the market, and based on stuff that the market can't take away from you. There's always going to be a bracketed market. It's going to move, pause, then move again, and there'll always be a condition where the market can trend. The market, they can't take that away from you. They can take a 5-10 period moving average crossover away from you. They can take a 75-25 RSI, an 80-20, whatever it happens to be, but they can't take move, pause, move away from you. They can't take trend away from you. And they can't take volume away from you. So get in there, spend the time, learn the stuff that works, that's there, that's consistent, that can't change. And you can do really, really, really well doing this if you're a calculated risk taker. Now, if you're not, go find somebody to trade your money for, or extend your time frame. And a lot of you'll get in here and you'll find out you continuously are self-sabotaging yourself. You're cutting your winners short consistently. Go do options. Be an option buyer. Buy a call a point away, a put a point away in the euro, 25 points away in the E-mini, a point in the note, 2 points in the 30-year, $2 in crude oil, probably $20 in gold. And then you got the trade on. You know you can't take it off. It suits your time frame. You got a limited loss, and you keep your hand off the mouse, and you can do pretty well doing that. Okay, this 1350 area is where we broke out from, and you can see it right here. You can see this spill over here that they've gotten into. You can see the start of the selling way up here at 1450. So it's our number 2 sell point. On the buy, we got volume down here at 90. Got the mode at 90, the mean at 80. So let them get a little bit below that. We'll make it 75 to 85 buy 1, and then 50 to 60 for buy 2. Lots going on between Greece and the EU next week. It's stretched out through all next week, so plenty of good opportunities to trade this and make a lot of money, especially if you're on London time. You can trade London time. You got a real distinct advantage. Now, it's a slower moving market, but that's not all bad. Okay, I'm going to shut down the recording right now, and I'll see if Chris has any questions that I haven't covered.